Hi, this is my second video reviewing the stock, and this one is going to be about SolarEdge. I've been invested in SolarEdge on and off for the past few years. I initially bought it with the intention to hold it in long term, but each time it reached around the 360 mark, I sold it because I thought it was too overvalued and I just didn't sleep well with it at night. I thought that the downside is really big right now and there is almost no upside. So it was a couple of times that I sold on 360 and bought again at around the 200 to 120 mark. And last time I did it again, and now it's really down. So I'm going to review it and see how I still feel about it. But I'll say right off the bat that the fact that it's been so down and I'm not absolutely positive that I want to add more already goes to show that I did some investment mistakes with this one, and I really need to look well in the mirror and think very deeply about it and make my conclusions where did things go wrong. The way I want to structure this video is I want to really briefly talk about what is going on right now with SolarEdge and how we got this far and what is expected in the next few quarters. But I really want to focus on the long-term prospects of SolarEdge because I am invested in it for the long term. I'm seeking to invest in it for the long term. And I think the major risks, the major top issues that I need to talk about are really related more to the long term, and then when I talk about that, I want to briefly talk about the management because there's not much to say, but to talk about the market, the competition, and the margins, which are the huge risks involving SolarEdge. So. And then valuation, hopefully, and make some conclusions. We'll see. So again, briefly about what is going on right now. So SolarEdge is coming off from a big boom in the market, both in the housing market, which affects it a lot, and in the solar market. It had a very big growth for the past few years. It had a few tailwinds working really well for it. The major ones are the low interest rates, which of course created a boom in the housing market, which pushed the residential segment of SolarEdge very much forward. And also the ESG policies of many countries, which promote solar and give incentives to both residential and commercial entities for going solar. So those things really worked well for SolarEdge. For the past few years, SolarEdge was growing really well. And its major problem for the past few years have been that it was not able to meet demand. It was in a constant undersupply situation where it was simply unable to keep pace with the growing demand, and it really struggled to ramp up all its manufacturing capabilities to produce enough inventory to meet all its demand, especially in Europe and the United States. And most of its problems were involved around that, which it seems like good problems to have as a shareholder when you hear about it. And those are good problems. You hear that there's so much demand for the product and the company isn't managing to grow fast enough just to meet the super growing demand. It's nice. I'm not saying it's not a problem. Of course it's also a problem. And they were losing clients, they were losing distributors, they were losing business. And of course, they missed on an opportunity to capture the market share. They could have if they were able to meet the demand. But still, you think that those are good problems and the future looks bright when you hear that. But what it did cause is a build up of inventory with distributors, which were living with this reality when there always isn't enough product to go around, and they were making those orders really in advance and trying to capture as much inventory as they could. So from that it went everything reversed now, and there is a huge correction in the market where first of all, already before the downturn, the current downturn, SolarEdge was already updating that it's managing more to keep up with demand, and it ramped up to different manufacturing facilities, and it made contractors with a contract with manufacturing contractors. So it really was more able to meet demand, and things were getting a little bit more stable there. But at the same time, the demand was beginning to slow down because of the macroeconomy, because of different factors. The first and foremost is the macroeconomy and the rising interest rates, which caused a slowdown in the housing market, especially in the United States, but not only, which was slowing demand. And then the regulation in many countries is always shifting. There are some new incentives put in place, and some incentives or tax breaks are expiring. So those things, in some places, those things also cause the decline in demand. So what SolarEdge is facing right now is a decline in demand, which we yet to know the exact extent of, because it's just beginning. So it might be the bottom right now, but it might be only the beginning. Together with the overstocking of its distributors of inventory, which caused like the perfect storm where distributors are not making orders right now anymore, and they're asking to cancel orders and to push back orders because they have so much inventory that they're not able to get rid of in the same pace that they expected, because they were expecting the demand to continue growing, and it's not growing as quickly. I think in Europe it's still growing, but not as quickly as they expected. In the United States, the situation there is really not clear right now, and I think there's some ambiguity about it. Something is a little vague. We don't really understand. I don't really understand how much of it is the market, the macroeconomy, and how much SolarEdge might be losing market share there. So it is also a risk. So right now the situation is that distributors are just focusing on destocking. They're not placing new orders with SolarEdge. I mean, they are, but much less. So the revenues of SolarEdge are going to be really down, because its revenues are what it sells to the distributors. The sell-through rate, which is what the distributors sell into installers and to end customers and to commercial clients, seem in Europe pretty much okay right now for the past quarter, but the trend is not good. In the United States, things are really stagnant right now, and in the rest of the world, it depends where. It really varies by country, but yeah, so what SolarEdge is projecting right now is that it's going to take a few quarters for the distributors to destock, and then they have a projection of this new norm, which is just a guesstimate. Nobody really knows where the revenues are going to go right now, but of $600–700 million a quarter, which is also, it's really rough because, of course, there's seasonality and we don't know, but it's just the best guesstimate they could give right now, and it's really down from their earnings last year. So, and it's gonna take. This is the sell-through rate they're expecting, and like the new normal sell-through rate. So it's gonna take a few quarters for the distributors to destock, and then that might be the new normal revenue. Mark, but we don't know, and SolarEdge also doesn't know. We're yet to see. Things could go even worse, and the revenues might decline even more, or it could go better because it is somewhat conservative. But we don't know the range of possible outcomes right now for the next few quarters, for the next year or two, is really big. So we just have to wait and see where the market goes with that. But I do think those are short-term things, and of course there is a downturn in the market, and we don't know how long this downturn will be. It all depends, of course, on the overall cycle in the market and the housing market and the interest rates and everything. And SolarEdge is, of course, impacted by it, but it is a downturn in a cycle. And what I really want to focus on as a long-term investor is where SolarEdge is going to find itself in the end of the cycle, and that's what I really want to talk about. And I think there are huge risks involved with SolarEdge long term. And SolarEdge is a good company. I love its management. I don't know much about them, but from my impression until now, they're really down to earth. There are also people that have been there from the get-go. It's really their baby with all the pros and cons, but I do like it. I think they've been very conservative with their outlooks and the way they manage the company very solidly. It has very low debt. They're profitable. They're making cash. They usually have very conservative outlooks, and they've been warning for a few years that the tremendous growth is not sustainable. They're not counting on being such a high growth company for long term, and I think they're really doing managing the company carefully. There's nothing wrong there with them. But the problem with SolarEdge lies really in the market that it works in, and the most important things are, the market, the competition, and the margins. So I'm going to touch a little bit on the margins, but the biggest risk with the margins we'll get to later on. So I used to think when I invested in SolarEdge like 2 years ago, I thought that right now, my thinking process was that right now they're working towards their economy of scale, that right now they still have a lot of costs building their manufacturing capabilities, and they had all those air shipping costs then because they were not able to meet demand, that they were shipping product via air, it was costly, so they had those more depressed profit margins. And I expected them, as they grow, to improve profit margins, both the gross profit margin and the operating ones. But right now, I don't think that like that anymore. I think that there is a huge risk involved with the profit margins of SolarEdge, because there are so many puzzle pieces, like the CFO says, that affect the profit margins, and it's really an unknown. We don't know from one side, they are supposed to reach some kind of an economy of scale. Of course, as they sell more products, all their overhead is supposed to be smaller compared to the revenues, and there must be some efficiencies in the distribution process and everything, and of course it will be there. But on the other side, there is the product mix, where the commercial part of segment is growing, and it surpassed half of its revenues, and it does have a lower, which is great. I think lowering profit margins because of product mix, it's perfect. It's nothing wrong with that. It's a very profitable business still, the commercial as well, and it's a huge business. It's also very big sales, not like a one home, one residential solution. Those are potentially very big clients, very big solutions, and very big profits, revenues and profits. So nothing wrong with it, but we should take into account that the gross profit margins will be lower as the commercial takes a bigger part of SolarEdge, of SolarEdge's revenues. Then we have the CapEx, which there is an inclination to think that it's only temporary right now, that they need to ramp up all the manufacturing facilities, and once they do that, they're great. And there is something to that. Of course, they're not gonna grow this fast always, and then don't need to grow their manufacturing capacities in this space in the future, but they always will need to grow it. And if I see for the foreseeable future that they will need to shift their manufacturing locations like they did until now. They moved to China, they moved out of China because of the trade wars, and then they opened the manufacturing facilities in Mexico. Now they're closing it, and now they're opening it in the United States because there are some incentives related to taxes, and their product is always changing. Now they're entering batteries, so they've been entering batteries for quite some time now, so they need facilities for that, and it's always evolving. I think those capital expenditures will continue for the foreseeable future, maybe at a lower pace, but it might be also even at in a higher pace. We don't know which technologically which project SolarEdge is gonna decide to enter in the next few quarters even, and how much it's gonna cost the company. So I do think, I'm not gonna say it's a very capital intensive business, of course it's not, but there is some capital there. It is hardware, and so yeah, I think that this is also an unknown. I do tend to think that in the bottom line, it should improve in the terms of profit margins because of capex, but I don't know. There is a risk there. So yeah, so you have all those moving pieces that really affect profit margins. And the biggest one of all is, of course, pricing, which we'll get to in a minute, but that's going to be the biggest risk with profit margins and by far the biggest risk with SolarEdge overall. But to get to that, I want to talk about the market a little bit. And of course, SolarEdge is operating in a very big and lucrative market of the solar. It's growing very rapidly. It has a fast, high CAGR, and it's supposed to grow further for the foreseeable future. But as we know, the fact that the market is growing not necessarily mean that every company in this segment is going to grow as well. And even on the contrary, there might be very big growth in the market, but the companies might not do well at all. And the thing with this market is, first of all, it's very, very young, and it's super fragmented right now. There's so much competition. There are so many players in this market. Some are big, some are small. And SolarEdge, it's not a big competitor, but it has its own niche right now, where it's not your traditional string inverters. It has some kind of a premium of a unique solution, not a totally unique. There are some companies that offer something similar, but it is kind of unique. So if you want your premium solution, you could go SolarEdge. But will that stay always the case? I don't believe so. We don't know. Nobody knows, and everyone that will tell you he knows is gonna lie. But I think the huge risk is of course, the consolidation of the market, where big companies are gonna buy out the small companies or just push them to the sidelines. Or commoditization, and commoditization in the market, where this product, which right now seems like in the spear front-end technology and very unique and something that is that's the future, is gonna get just commodity, just something regular you buy, you don't even think about, and all the products are gonna be pretty much the same and offer pretty much the same. And we've seen that so many times throughout history, when I don't know if it's from the classical examples of the car industry, where yes, cars were the future, and today, like, every family has 2 cars, but not everywhere. But the car companies didn't do this well, and especially their shareholders. And today you buy a car, I buy a car, they're pretty much all the same. Yes, there are some differences, but they mostly compete on the price, and they're all the same. And we've seen that in the cellular phone markets, when at first, you had this, Nokia, when you could play Snake, and it was so cool to play Snake. But right now, it's just, they're all offering pretty much the same. And of course, you have the iPhone, which has its own brand, and it's a premium. It can really charge extra for what it's offering. So there are some companies that will manage to position themselves as the premium product, the premium brand, but mostly they don't. And right now we can say that SolarEdge is really offering something unique, but will it stay unique in 10 years from now? And what does it need to do to always stay this unique product that offers something extra on, just general competitors like Huawei and different companies that just are given a general solution right now, but they can catch up really quickly. It's not that hard for them to just implement some additions. This market is gonna evolve. The technology is also gonna evolve. Right now, yes, SolarEdge has the optimizers on each panel, and Enphase has the mini microinverters on each panel, and Huawei just has the string panels, but the string inverters, but it's not necessarily going to stay the same 10 years from now. It's a market that is very, very rapidly advancing. It's hardware, which is always exponentially advancing. And it's going to all change up. And that's why I also chose not to talk this much about technology in this video, because I don't think it matters in the long term. It's going to change so much. Everything I will say right now is going to be old news in just 6 months from now. And so I think that is the biggest risk with SolarEdge. Will it still be able to even hold onto its current market share in 10 years from now? We don't know. What I'm saying is it basically, I think, doesn't really have a moat. And it might be able to build a moat around its brand like Apple did maybe, but I don't know if I want to bet on that. It's a huge risk. It's not necessarily going to happen. It's not something that is guaranteed. And so as the market matures and solutions, right now you have all those different solutions which offer different things. They pretty much get to the same funnel and they pretty much start offering pretty much the same. I do believe that's going to happen. The biggest thing is going to be price, and there's no question at all for all of the lifetime of SolarEdge. There's going to be some pricing pressure on it. It cannot price the way it cannot raise prices. It's not that kind of a business. It has huge competition and it's always about price. And it was able to not raise prices for the past few years because of the undersupply and over demand situation where there wasn't enough product to go around. So of course prices were even, it depends where you look at it. The prices of inverters is going down, but the overall solution of SolarEdge that are selling, the ASP, average selling price, was going a little bit up. It was mostly stable the last few years, but that was also nice because you do always wait for the price reduction and the price pressure. And now it will definitely come when there is a decline in demand and there is probably an oversupply right now. They need to ramp up, they are closing up some manufacturing capabilities because now they're producing too much and there's not enough demand for it. And that's happening to all the players in the market. So there are definitely going to be some price reduction in the near future. And that's going to, of course, affect tremendously the profit margins of SolarEdge. It might even get it to losses. It might happen. And then when I look at it if that was just short term because of the down cycle, I'm okay with that. But when I look at it long term, I don't know if SolarEdge will be able to maintain its price level, and I think it won't. There will be some very fierce competition in the market, and it's gonna come down to prices, and there are gonna be price competitions and price reductions, and it's gonna get to razor thin margins like it does in a lot of those industries where the market is at first young, but as it matures, there is some, again, consolidation and commoditization in the market. And then it's just, we don't know. There are different examples and different outcomes, but it's a huge, huge, huge risk. And as much as I love SolarEdge, it has been one of my favorite investments, like the one I slept best with at night. Right now, I'm looking in the future. I don't know why I just decided to ignore this fact. It's not that I didn't know it, and I really need to think hard about it. But I don't know where SolarEdge, I mean, this company will still probably be there unless it's gonna be acquired. It's gonna probably still be there. It's not gonna go bankrupt. It's very solidly managed again. It has very low debt. It has its financial, its balance sheet is very strong. It has a lot of cash right now. It's even doing some share buybacks because it's gonna have some extra cash from all those past orders in the next quarters. And it's a really good company, but where is it gonna be positioned in the market 10 years from now? I mean, it could still be there. It's gonna, their CEO and employees are gonna be all okay, but we as shareholders, we don't know where the profit margins will be. And the growth also, I mean, there is some reason to believe there's going to be some growth because the market is huge and it's growing, and you can say there is enough cake for everyone, but again, if now, I don't know, Huawei will be able, okay, there are some regulation issues there, but let's say will be able to offer similar solutions to what SolarEdge does, and all some optimizers and some apps and some monitoring. So maybe it will, for most people, be good enough, and then SolarEdge might lose market share, and its revenues might be even going down, or the growth is really going to be stagnant. So those are the huge risks involving SolarEdge. We don't know what its market position gonna be, what the long-term growth could be. It could be very high, like it has been until now, because the market is growing, or it could be even declining because it's gonna lose market share. I think it has no moat, and therefore the profit margins, it's really hard to project when you're trying to evaluate a company and you have no idea whether the profit margins with SolarEdge, it could be 5% net income margin, it could be 15% in net income margin, and that makes the valuation of the company 3 times difference. I mean, it's and you don't know, and this is the big risk, not knowing the possible outcome when there is such a wide range of possible outcomes. That is the risk. That's how risk looks like, unlike volatility that they say. So if you have the very narrow, like there are always the end possibilities, but the probable possibilities, if they're somewhere in the middle, and there is like a narrow range when you can project that it's probably going to be within that narrow range, that is a low risk investment, because you can if you have 10 investments like that, you can pretty much count on it. But when it's that wide, you don't know, and you're just betting at this point. I don't know. I need really to think about it, and I really need to make my own conclusions. Why did I choose to ignore it before? And I have some answers already. Maybe I'll do a video about it. So yeah, that's with SolarEdge. I don't know. I mean, it's a very good company, and the management is good. It's very solidly managed, very carefully. I mean, but there is only so much the good management can do when the market is tough, and it relates to what I said in the previous video about Alteryx. I would rather to hold, which I just proved to be wrong, but I would rather to hold a good company with a bad management than a bad company with a good management. And I'm not saying that SolarEdge is a bad company. It's a good company, but the market is gonna be tough, very tough, and there's only so much the good management can do about it. So yeah, so I'll try to talk a little bit about the valuation, but all that I just said really transpires very hard on the valuation, when it's really hard to evaluate, and that almost takes it to the too difficult pile, when you can't even do the valuation because the range of possibilities is so wide. I mean, its revenues could decline over the next few years, or it could get back to growth of 40%. So we don't know, and then the profit margins could be 5%. There can be a loss for I don't believe that long term. I mean, there is the business model is good. It's not an unprofitable company, but again, if there's so much price pressure 5, 7, 10 years from now, it really will need to cut its costs, and then we don't know what the profit margins will be, and how will it be able to grow and maintain its position in the market. So yeah, so about valuation, I'm gonna do just 2 probable scenarios, but again, I don't know. I feel it's still nearly garbage, those valuations at this point. So yeah, so those are my 2, like pessimistic and optimistic, but again, I feel it's the pessimistic, it could get much worse, and the optimistic, I don't know if it's not even probable. It could be better, but I think, I don't know, maybe it's wishful thinking. So yeah, so this is the pessimistic one, and okay, this year is already, it's pretty obvious, it's gonna be 3 billion, but let's say next year the revenues are gonna get even lower, and from there's gonna be some, they're gonna get back to growth. So in 2025, they're gonna grow 14%, and 20%, 20%, 18%, 15%, and 13%, slowing growth, again, maybe downturn in the market, or just a slowing growth, and not gonna project increasing growth, and I always try to take into account that what will happen when the growth is going to slow, and then the PE ratio is going to also contract because of that, and that contracts the valuation of the company. So I really want to take that into account. And in this scenario, let's say the net income margins are going to be gap. Of course, I'm always gap 7%. I don't know. I'm just trying to like think what could be their normalized earnings power, but we don't know. Nobody knows. The CFO doesn't know. Nobody knows. So let's go with 7% right now, which is pretty much pessimistic because there have been over 15% already in the past few years, but and they still had all those meeting the demand problems. So 7% is low for them, but they can get there. They can get even lower again with the price competition and. Yeah, so 7%, and then I adjusted the PE according to based on the growth pace, but I want to be conservative. I don't want to really take twice the PE. I don't want the PE to really be twice the growth ratio, but lower, like more conservative. I like it that way. So that's going to be the price, and we see that there is more downside right now. Definitely, I think there is more downside right now. The stock could go even lower, and we can see that it's still overvalued in that scenario, and the fair value would be with a discount rate of 15%. If you expect a 15% return from an investment this risky, then the current fair value is $47. Yeah, and I bought it in 213. So what was I thinking? We're gonna think about that really hard. And in the optimistic scenario, again, it could be much better, but it could be much worse. I don't know. It's just a really crazy guesstimate, which I don't feel holds any water. So that goes to show the risk. When I can't evaluate, it is. I think evaluation of SolarEdge right now is really in the too difficult pile, but let's go with that again. So this year, yeah, it's going to be 3 billion, but let's say next year it's going to be a little better. And then from there, let's say they're going to accelerate the growth again and grow really nicely. Of course, I don't think they're going to get back to 40, 50% growth. But even if they do, of course, I'm not going to insert that into my valuation model. And then let's say that my profit margin is going to be 11%. Again, I don't want to say that from now they're going to improve their margins. They're not going to improve their margins. They have both the product mix and the pricing competition, which is in front of them, and it's going to be a slowdown in the market right now, so it's going to cost them, and they have all those increased costs because of the manufacturing facilities that are not currently working at full capacity. So I'm not going to project they're going to go back to 15 or even improve on that if from 15% in net income margin. If they could, great, but I don't know. That's not very probable in my opinion. So we'll go with the optimistic, the case scenario, maybe 11% net income margin. And then again, the PE based on the growth rate. And those are the prices by year, and that gives us a very nice return, and that the stock could, the share price could get to $450 7 years from now, and with a discount rate of 15, that makes a fair value today of 166. Again, super guesstimates, even not guesstimates, just a wild guess. So yeah, so we can see the big difference. So it's between $125 7 years from now to $450 7 years from now, and that's a wide range, wildly wide range, and the true range is even wider because it could be much worse in this scenario. Of course, it could lower revenues for a few long years now if there is a long downturn in the economy. We could see depressed revenues for I don't know, 5-6 years until the upcycle begins again, and from there maybe a steady growth, maybe not. Maybe SolarEdge will lose overall its market share and its advantage in the market that again doesn't really have a moat in my opinion. So it could happen any day. And yeah, they could grow maybe faster than this, or maybe next year we'll see some improvements. And they did say that those 600, 700 million dollars are not taking into account some other sources of revenue, which are really small, not that material, so it doesn't really matter. But they are being conservative. We don't know, and that's the main point. Yeah. So just to make a few conclusions. Yeah, I think the reason the share price is down right now is mostly because of, I don't want to say short-term noise, but those are some short-term or mid-term aspects of SolarEdge. But I think the biggest risk are the long-term problems, which of the market, where this market will go, what will it look like 10 years from now, who are going to be the big players who win, and who are going to be the small ones that do not survive in this environment. And yeah, I think I'm gonna continue reviewing some more positions in my portfolio before I decide to make any move. But yeah, I don't like it as much as I did before. I still love the company. It is a good company. I love the way it is managed, but just where will it find itself in the future? I don't know. And I do feel there are so many psychological pitfalls of investing that are working with me with SolarEdge. I mean, I really need to think really deep about it. How did I choose to overlook it when I first, many times, and did a deep dive and deep research on it? And I don't know. I have already a few guesses, but I think that's my homework for now. So yeah, so we'll see in the next one. Bye bye.